try, as I say, try to first think how many active and open trades you are likely to have at any one point in time. Okay? I'd say don't have too many, because it just gets messy and one gets a bit sloppy and you're not following things closely enough. Based on that, the maximum you would have is your maximum amount of capital divided in your maximum amount of open trades. So that would be your maximum allocation. That would be how to work out the maximum allocation to any one trade. Now, based on that, I wouldn't double up because I've got half as many trades. I wouldn't double up on position size because I've got half as many trades, only if I had a very, very strong feeling about a particular trade. And even if I had a very strong feeling about one trade and I only had that one trade on, I would not put all my capital in there. I would limit the exposure there as well, no matter how strongly I felt about it. And then in terms of your drawdowns, I mean, this will depend on the individual. I think that sometimes an overly mathematical system does more harm than good, because it puts you into an enforced straitjacket that is unnecessary. Likewise, this risk-reward ratio that is always bandied about, 2 to 1 or 3 to 1 or whatever. Again, I think that often is an unnecessary straitjacket that is not going to work, especially when you've got trailing stops. Because if you're working with trailing stops, then your profit level has always got to be X more than your trailing stop. Well, by that logic, then your profit level is going to be ad infinitum. But it's stupid. It's not possible. The market will eventually get to a point where you will want to take profit. So don't impose unnecessary models on yourself. Years and years and years ago, I saw an enormous head and shoulders pattern in the pound against the Deutschmark. It was so enormous, I just couldn't believe my eyes. I got terribly excited about this trade, and it was going to be huge. With a bit of luck, it was going to make my sort of quota for the year. Anyway, so I got terribly excited about it, and so I wanted to do a much larger size than I usually did. And I checked with my immediate boss, who's extremely supportive. I must say, I've worked with some fantastic people over the years. Very supportive. I said, look, I've really got to do this. Yes, but he said, it's a US holiday on Monday, and markets will be short and thin, and I think it was Easter, Good Friday, or something like that. So basically, all international markets were going to be pretty much closed on the day after I took the trade. So I don't care, I'll be all right. I'm really keen on this trade. Go on. So I went short the pound. And much to my delight the following day, not only had the thing gapped through any conceivable gap you could have possibly imagined, that it was just in a tailspin, because it was the day after the Plaza record that decided that everyone was going to weaken the US dollar because it was too strong. And I had pretty much the same trade in every currency you could think of. The dollar Swiss and dollar yen and sterling mark, and I was just up to the eyeballs in the biggest at that point, the biggest trade I'd ever done. And within a week I'd sort of made quota for 6 months, yeah. I wouldn't do that again. I mean, sort of front running it. I mean, you name it. I did everything wrong. But I was just very lucky.